Alright, let's talk about Tesla. The earnings came out at the after hours, tanked a little bit. The day after, the whole entire day, they were actually down. They were down close to 10% actually, 9.74% down for the whole entire day. Right now, it is Friday. The market has not opened. We are not even in pre-market as of now, but I do want to get through the earnings with you guys first. Alright, so let's go through earnings. Okay, so first up, operating margin, a huge decrease. But I do want to say that, for people who don't really understand what's the whole situation, why are they selling off? They are actually doing relatively well. What's the issue here? It's the margin. Okay, and more so than just the margin, it is actually the vision of the company. Okay, let me just explain myself a little bit. Okay, so for people who don't understand where Tesla actually came from, Tesla has always prided themselves to be the company that is going to be better than the legacy motor companies like your Ford, your GM, and all the other German car companies out there. And what they are able to do from that point onwards is actually by creating a lot more margin than all the other car companies. What Ford and GM are doing, their operating margins is somewhere in the 8 to 12%, if I remember correctly. Some of them are upwards of like around 15%, but no one is actually over 15% in their operating margins as it is. Okay, so usually Tesla is going to be hitting 24, 25. There are even quarters where they actually hit 30% of margin, operating margin as well. So what does this actually mean? If they are able to get margin so high, which means that they don't exactly have to earn that much money from just they can earn a lot of money from just selling cars alone. They don't have to really leverage on the different tech that they actually have as well. They don't have to leverage on the services that they actually have as well. Okay, so what this actually creates is that Tesla is going to be this crazy big tech company that does what the auto industry is doing, but at a way better level. Plus, on top of that, with all this cool tech, FSD, all these different automated driving and things like that. So for Tesla to suddenly have this sudden shift in vision in this current quarter, a lot of people are going to be selling off. Okay, so let's look into the entire earnings report. Okay, our operating margin remained healthy at approximately 10%, even with price reduction in quarter one and quarter two. Okay, so for people who forgot about it, Tesla actually cut their prices down, I think 2 to 3 times. And for them to actually cut 2 to 3 times and still manage to get their margin at about 10% is quite alright, I guess. But the thing is that a lot of people are thinking that once you actually reduce the price, it's really hard for you to bump up the price out of nowhere again, unless you suddenly get a more of an inflationary trend again, or you can actually justify the cost increase from there on out. But of course, what Elon Musk has also been talking about is that he really wants to make Tesla Model 3 one of the cheaper cars in the whole entire auto industry, so that people would actually have a hard time deciding, do I want to get a Toyota or do I want to get a Model 3? They want to make it so seamless to the point where it becomes a no-brainer for you to actually get a Model 3. That sort of thing. Okay, so, but the good thing is, of course, in quarter one, they actually managed to get Model Y to become the best-selling vehicle. Very, very good on Tesla, because this is a huge thing. For best-selling vehicle globally is actually quite a title. So for the Model Y to actually get it is actually pretty nice. And also Model Y, honestly speaking, a big fan of Model Y. In Singapore right now, where I'm from, we only get Model 3 and Model Y in terms of the main production line. We are able to import Model X's, but at the moment I think we have about 10 or less than 20 Model X in Singapore as well. So that's not exactly something that we can really see on the road as often. Okay, but anyway, you can see in conclusion, we are focused on cost reduction, okay, new product development that will enable future growth, investment in R&D, better vehicle financing options, continuous product improvement, and generation of free cash flow. Okay, so let's talk about this part. Okay, so what they're basically saying is that they want to look at cost reduction now. Okay, what this would actually means is that they would effectively have even lower margins as time goes. So two different scenarios you can actually see this for. The first one is if you are a bull, you can say that yeah, this is great. Okay, they want to lower their margin so they can actually do more volume rather than more margin. Technically, if I were to say that I want to become the world's biggest auto industry, I would say I would do that as well. I want more volume than more margin, because lesser margin don't mean anything if I can sell 10 times more cars. Okay, if the whole entire world is driving my car, my margin can actually go down to like 5% and I will still be making way more money than I would be if my margin is at 20%. Okay, so technically, it's more of a vision change, which is scaring some of the long-term goals that have been stuck with Tesla from the get-go, because they wanted the hyper growth stock option that Tesla actually provides in the whole entire industry. Because no other company is actually doing such a high growth in terms of the in the auto industry. No one has been disrupting the auto industry at the same level as what Tesla has been doing. So for Tesla to suddenly change the narrative to say that, okay, you know what, we want to do more towards the cost reduction. Oops, sorry. Like we want to do more so to the cost reduction side of thing. That kind of become sounding more like a legacy motor company, which is why people were a little bit more concerned. Okay, so now let's move on here. Let's look at the numbers. Okay, you can see gap gross margin over here. The last quarter was at 19.3%. This quarter it was at 18.2%. Honestly, the market consensus was actually hoping it to be at about 19.5 for margin to still increase, but not dramatically, because we all understood that price reduction was already there, which is why we weren't expecting that high of a gross margin. But even then, we missed quite badly. And if you were to compare it to the last year, same quarter but last year, we were at 25%, and right now we're at 18.2, which is 682 basis point, so about a good 6% or so. Operating margin, same thing. Last year we were at 14.6%. Right now we're at 9.6%. Just to give you guys a little bit of a sake of comparison for you guys, what BMW and Mercedes, what their operating margins are at the moment, they're at about 10 to 12% for both of those companies. If you're looking at Ferrari and Lamborghini, all of them, they're doing it 40 to 50% operating margin. But of course, I do not want to bring those into this comparison sake, simply because they are so high end to the point where people who buys them because of the status that it actually provides, and at the same time, to some extent, they would also actually be some form of an investment as well. So, because of that, I wouldn't bring the Ferrari and the Lamborghini into this comparison, but we have to bring in the Mercedes and the BMWs. All of them, they're doing about 10 to 12% in operating margin, while Tesla is doing 9.6, which is why it's starting to become a little bit more concerning. Because if your profit margin is lower than all your so-called counterparts or your rivals, and your volume is not exactly way higher, then what does it actually mean, right? And earlier when I was talking about the two different scenarios, so that was the bull case scenario, which is like basically you want it to be in volume wise. But of course, at the same time, on top of just the volume wise, you also want to think of the fact that on top of what we can earn from a high volume, low margin business, we can leverage the technology and the AI that we actually have. Your FSD, your autopilot, all these different services that you can actually provide, supercharging network, all these different services that you can provide to other companies or even to just consumers end to end. When you actually can provide all these different things, your profit margin do come back anyway, so that's not going to be that big of an issue. That's the bull case scenario. Okay, now the bear case scenario, however, is going to be if you are going to be doing high volume and low margins. Okay, what if your margins went down but your volume doesn't pick up? Then that means you're going to be screwed on both ends. If you're not going to get you're going to get lesser margin. That's a sure thing. A higher volume is not an assured thing, because a higher volume simply means that you need to have a higher demand. that's not going to be helping you as much because a higher demand is not exactly fabricated. You need people to actually buy it. However, for the margin side of things, you can choose to earn lesser, that's fine. You can create a market price, you can lower the market price, that's completely fine. Okay, so that's kind of the bear case scenario for Tesla at the moment. And yeah, which is why, and also at the same time, they don't really believe in the fact that the AI services, FSD, all this different thing would actually garner that big of a profit in the long run. So yeah, Now let's move on to the free cash flow. Okay, let's get back to the numbers. Free cash flow wise, you can see last quarter we got 441 million, and this quarter we hit $1 billion. Okay, big fan of the free cash flow increment. And let's not forget, this is not even all of it. As of now, free cash flow, just remember this $1 billion for now. You can actually see there's going to be a lot more things that actually affect this number upwards. So it's a good thing. Okay, so anyway, let's go down. Revenue. So the positive thing that actually happened, growth in the vehicle deliveries, I think is a good thing, of course. More deliveries basically helping with the narrative that they do want a higher volume. That's a good thing. Growth in other parts of the businesses, of course, that's a usual thing, especially for Tesla. They are aiming for a compound annual growth rate at 50%, so pretty good. Now the negative things, the reduced ASP year over year, excluding foreign exchange impact. The average selling prices of all these different vehicles have actually went down. But of course, this is due to the fact that we have 3 levels of price cuts. Okay, 2 of them actually had something to do with the credits by the end of the year during, I think, no, it wasn't the end of the year, it was end of the quarter, it was from last year. It was from last quarter, where the tax credit kind of changed a little bit. Now, next thing is negative foreign exchange impact of $600 million. I think this is a huge thing. Okay, for foreign exchange impact to have a negative impact of $600 million, they put it at 0.6 bill, which is $600 million. So if you actually were to put it into context, if the market was actually relatively flat for all the different countries, you're looking at the free cash flow possibly being marked at about $1.6 billion. So that's one thing. There's still one more huge thing we have to talk about later on. Okay, so profitability, because with a reduced average selling price due to mix and pricing, the cost production ramp of the 4680 cells and other related charges, increase in operating expenses driven by Cybertruck AI and other large projects. Let's talk about that. Okay, I just uploaded the Cybertruck video. It's going to be somewhere up here. It's up all the way up there. Okay, and basically, I was just talking about how they actually came out with the Cybertruck, and they were talking about how it was already in production. But in this earnings report, they actually basically were saying that it is not exactly in production just yet. They are going to be starting to ramp up the production for Giga Texas, which is Giga Austin. Okay, so not sure what is actually happening with the whole entire thing, but they are going to be showing us some pictures about how the Cybertruck is going to be created later on anyway. But yeah, okay. Anyway, all this yada yada, normal stuff. Okay, total production. Okay, production. It's nice to see an increase, of course, at 479,000 vehicles, whereas the last quarter we were at 440,000. So an increase about 40,000, I would say a rough 40,000 vehicles, which is pretty good. Quarter over quarter, to have about like 10% quarter over quarter in terms of total production is a pretty nice number to have. Okay. Now let's look at year-over-year numbers for the total deliveries. Okay, Model 3 and Model Y has always been this flagship model that Tesla sells the most of. The Model S and X is the luxury models, which is why we don't expect them to get sold as often, simply because of the high price range, and of course with the luxury specs that they actually come with, we would expect a higher barrier of entry for people to actually buy them. Whereas the Model 3 and Y is quite competitive in terms of pricing with all the different rival companies out there, be it your different EV companies or even your ICE vehicles out there as well. So for you to actually see an 87% increase year over year in terms of deliveries for Model 3 and Y is insanely good. Okay, I'm pretty impressed with this number. Okay, total deliveries up by 83%. So you can tell that, yeah, Model S and X is not really helping much with the numbers as it is. But if you were to actually take into consideration that this number over here, you can see, oops, hold on, let me just highlight it for you guys. You can see quarter over quarter, there's a huge increase here. Okay, there's a huge increase. From the last quarter, they were doing 10,000. This quarter, they are doing 19,000, which is a huge thing. Okay, so I do think that there's a good increase in terms of the luxury models as well. I do believe that is also mainly from the tax credit change, which is why it kind of spurred people to actually spend money to buy their EVs to lock in the amount of money that they are able to save. Okay, so global vehicle inventory days of supply currently for this quarter is at 16 days. Previous quarter we are at 15 days. I'm liking this number a lot. This is a lot better than last year because last year we were at 4. Okay, so of course you can actually say that there are two different ways you can actually look at it. Of course, the bullish case is that saying that, their supply is a lot more is because they have to fit for the amount of demand that they have. They cannot have a sudden, a stuck in the supply chain where they are unable to actually deliver those different vehicles. Okay, if you think about it, back in 2021, anyone who wanted to buy a Tesla, you have to wait 6 to 8 months before you can even get a Model 3. But right now, if you were to buy any of the Tesla vehicle, you can get it within the month, maybe even within a week. So pretty good. I think the supply side is completely solved as it is. So really nice to actually see the vehicle inventory actually go up. But of course, like I said, the bear case would also be that, you have such a high inventory supply at the moment. What if the demand actually gets cut off? Then you're just going to be stuck with so many vehicles that people are not going to want. And then if no one's going to want all these vehicles, you have 16 days of supply. That's a lot of vehicles that will most likely go and become a loss. That's the kind of argument. I don't think the bear is right about this argument. I do think that the bull case is a lot more susceptible. But of course, I do want to say, full transparency, I am not holding any shorts or any long on Tesla, so I'm completely non-biased about this. I just like to look at different earnings report, and Tesla is kind of one of those that a lot of people like to look at. So just want to make some content around it. Okay, anyway, let's move on. US, California, Nevada. Let me see if I can zoom in on this kind of thing. Okay, cool. It's easier for you guys to read from here. Okay, so Gigafactory Texas, in addition to the continued success of the Model Y ramp, we are also working on equipment installation for Cybertruck production, which remain on track for initial deliveries this year. So, which is why we actually thought that it was already starting to come out with the production to deliver, but apparently not. So we're still expecting the delivery to be happening this year, which would most likely be happening by quarter 4. I don't see them doing it by quarter 3. I think they will still need a lot more time. Okay, we have made notable progress on yield improvement on our 4680 cell production lines. We continue building capacity for the cathode production and lithium refining in the US. Okay, so I do want to say this first, which is that I think that the build quality for the Giga Austin, the Giga Nevada and California, I don't think that their build quality is as good. From what I actually know, the Model 3 and the Model Y, all the build quality that came from them wasn't exactly fantastic. However, the Giga Shanghai was amazing. Okay, because in Singapore we do get all the Model 3 and Ys from Giga Shanghai, and then I do realize the huge improvement in the build quality. So honestly speaking, I don't see a huge demand for the Cybertruck yet. But at the same time, I do see a huge demand for the Cybertruck in the US. But if it were to go globally, I would really only trust Giga Shanghai to actually do a good enough job in terms of the build quality. So hey, that's just my own opinion on that. Okay, anyway, let's move on. Okay, this is the one. This is the big one actually. Okay, so Artificial intelligence, software, and hardware. Four main technology pillars that are needed to solve vehicle autonomy at scale, extremely large real-world dataset, neural net training, vehicle hardware, and vehicle software. We are developing each of these pillars in-house. This month, we're taking a step towards faster, cheaper neural net training with the start of production of our Dojo training computer. Okay, so first of all, you have to understand that they spent, that they spent $1 billion or more than $1 billion on this Dojo training computer. Okay, and of course, the main reason is because Nvidia actually ran out of chips to supply to Tesla. Elon Musk was actually complaining about it on Twitter, which is saying that and during the earnings call as well, he was saying, hey, however many chips that AI chips that Nvidia want to send over to us, we are going to take all of it. It's just that the supply is just not enough for them to actually do whatever computing that they actually need to do so. So which is why they have to actually invest into their own Dojo training computer. Okay? And for them to actually invest into this Dojo training computer, they spend more than $1 billion. So if you think about it, if you take these two different things, okay, you're going to take in the Dojo computer and then you're going to take in the negative impact on the foreign exchange. You're looking at your free cash flow easily somewhere in the $3 billion range already. Okay, which is quite insane. The more I think about it, the more insane it is to me. Which is like how Tesla can have so much free cash flow despite the fact that they are having so many different cost reduction talks as well. Okay, so maybe, just maybe, the volume over margin might actually be working out. Okay, so let me just mix this down a little bit here. Okay, the rest of it, the energy talk, nothing really huge about it. Let me see. Okay, so over here you can see we're planning to grow production as quickly as possible in alignment with the 50 compound annual growth rate target we began guiding in the early 2021. Right now they're easily over the 50% compound annual growth rate. I believe that because even for stock price wise, year to date, I think they're already up like 300%. So I do think that they are probably going to be remaining long ahead, long term straight remain ahead for the 50% the CAGR rate. So yeah, pretty good. Cash wise, honestly, I think they're fine with cash for it, unless if Elon Musk do need to sell more Tesla shares to actually do something, I don't know. But other than that, I think cash wise is completely fine. Profit. We expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profit. Okay, let's talk about this a little bit, which is basically the end of it already. So let's talk about this, and then we'll end this video. Okay, so them expecting the hardware-related profits to be accompanied with an acceleration of AI, software, and fleet-based profits. What does that actually mean? Which is basically going towards the bull case scenario that I talked about earlier in the video. Okay, because what this actually means is they're saying that, because we have this hardware related profit right now, our margins is actually going down on our hardware. We need to actually accompany it with our FSD. So for example, if you're going to be paying an additional $3,000 for FSD every year, or you're going to be paying additional for the supercharging network for other vehicles. Because right now, let's be honest, you have like 10 different car companies jumping onto the supercharger network for Tesla as well. So Tesla definitely have to find a way to monetize on all these different income stream. Okay, so the way they can actually do it, they don't have to just base it off just from just the hardware itself. They can easily just pair it all together and actually bring it together in with the AI, with the software, and all these different things. So I do think that Tesla do have a pretty good long way to go, but I think it's pretty much certain that they are going to be growing very, very well. Okay, but of course, it comes back to it, which is the stock price for it. At the moment, Tesla is at $266. Okay, we're already in pre-market. It just came into pre-market. Tesla is at $266 at the moment. Personally, I don't think that it's a really good time to buy into the company, even though it would grow, but the stock price don't really reflect the actual price of the company. I do think that if you really want to invest into companies to get a lot more money, okay, or at least not lose as much money. I wouldn't put it in Tesla right now. Earlier, I think like at $180, $190, those were pretty good prices to buy in at, because that was the hypothetical correct levels of buying in. Right now, I think it's a little bit overpriced. Of course, you cannot take into consideration that, what if Tesla just moon all the way to $800? It can definitely happen, but it don't have to happen because of the economic or because of the math behind it. It can happen because there's some form of a FOMO happening, that people are worried that they will be left behind from this whole entire thing. But yeah, overall, I do think that this whole entire earnings is just a huge letdown because of the change in vision. But they have to just hopefully reshuffle whatever hand that they actually have and play with the cards that they are finally dealt with, and hope that they can play a long game with this new hand. Okay, that's all I have for this video. Thank you so much for watching, and I'll see you guys in the next one. Bye.